Hey everybody, it's Ed and the future is now. And the future is the earnings week coming up. It's a big one, and it's a big one for a lot of people, but it's definitely a big one for me because I'm heavy on Tesla and heavy on Amazon. I'm going to talk about both of the two stocks and basically my judgment and situation with both of them. Okay, let's start with Tesla, okay? Because I know most of you guys are Tesla fans that follow my channel and stuff like that. So, but anyway, and that's where I'm heavily weighted, okay? 35% of the portfolio is weighted on Tesla going into Tuesday after hours, okay? I may adjust that slightly either way, depending. Maybe that's based on what you guys think or don't think, okay? Maybe not, maybe I just leave it there, whatever, okay? And Amazon weighted about 20%, okay? So 55% of the portfolio is weighted in on that earnings. That's why that's pretty huge, okay? It's about 140K. So I'm trying to do the best here to make the best judgments because no matter what, earnings is a gamble. You are gambling if you are riding in shares going into earnings, no matter what. Okay, but anyway, let's get to Tesla. Okay, the key thing with Tesla is really one thing. This is the only thing that matters. Everything else is boilerplate. But what matters is their EV credits. Okay, if they get EV credits of 250 million to 350 million in credits, they're probably going to show a profit, and that's going to put them eligible for the S&P 500. Okay, now in my estimation, they will probably get those credits. And the reason behind it is the car companies, due to this pandemic that we're in, the car companies are probably going to have to continue to pay Tesla those credits. So as far as Fiat, Chrysler, whatever, there's credits that go into Tesla, and that will make or break them on profitability or not. Okay, not on their car sales. They didn't do 120,000 cars or 150,000 cars where they would automatically probably make a profit. But so they're going to have to rely on those credits. Okay, but based on also the psychology of Elon. Okay, Elon's been pretty quiet lately when it comes to Tesla. Okay, and I think that's a positive when it comes to Elon, I think. So you can see on this chart, basically it's showing that they're forecasted to lose $2.31 EPS. Okay, I'm sorry, 235. Okay, now I think that doesn't really matter. I don't think they're actually going to lose that much no matter what, if they get the credits or not. So they're probably going to beat that almost no matter what, in my estimation. But if they don't get on the S&P 500, I think that could still drive the stock down, okay, in that scenario. But I'm betting, once again, it's all on the percentages. My percentages run about 60%. Elon said it's going to be tight, okay? It's definitely going to be tight. So I'm thinking not 50-50. It's more leaning 60-40 in my estimation. So, we're leaning a good percentage of shares that direction when it comes to Tesla. Okay, that's my opinion on the earnings, and we're backing it up financially. Now, Amazon gets a little more interesting. Now, I basically have insider information, and I don't mean the illegal, against the law insider information. Okay, I don't know anything about the internal workings of Amazon, the company, okay? But I actually have my own Amazon business where I sell as a third-party seller on Amazon. Now, I'm going to give you information that most people probably don't know, okay? And basically that is that our sales have increased 300% minimums to minimums on a daily basis to 400% maximum to maximums, okay? And that's a huge increase over the last quarter, okay? So in my estimation, that is going to crush the earnings, okay? That's my opinion. I don't know. I'm not saying to buy or sell anything. I'm just saying that $1.70 EPS, look at how low it is on the chart. Okay, it's insane. Okay, I don't think that's a possibility when basically from Q1 to Q2, they could be up 200, 300, or 400% in revenue potentially. I just don't know all of Amazon's revenue sources, what they rely on. I haven't studied the company for years upon years to have all that information. But the information that I do have from my microcosm of a company, that Amazon has got to be crushing it. They're not just selling masks and necessity goods. They're selling a ton of stuff. So, and more people are shopping online. Okay. That's just makes more sense. And I'm showing that on my end. Okay. My end of Amazon, up close to 400%. And they're saying that they're going to do $1.70 earnings. I find that to be super unrealistic. So I'm pretty sure they're going to beat almost 90%. The question is, how bad are they going to beat? So I'm, definitely in here 20%. The only reason I haven't pushed more than 20% in is I don't know enough about the internals of Amazon to know if they're losing money in other areas or in other markets and what's going on globally with the company. Okay. So I'm just, basing a lower percent on that. So anyway, that's the breakdown of Amazon. So I'm pretty sure the revenue is going to crush, but this is just, I can't be 100% on anything. I'm just going maybe 70 to 80% that they're going to beat this. So, I mean, that's good odds, so 60% on Tesla, 70, 80% on Amazon, and we're weighted about 50% of the portfolio on both. So if you get to the math, and the reason that I'm running 35% and 25% is basically the risk that we're willing to take, okay? So if there's three scenarios here, basically, okay? They both beat, they both miss, or one misses and one beats, basically, okay? Let's say Tesla gets on the S&P, but Amazon misses. Let's say Tesla doesn't get on the S&P and Amazon crushes. Okay, so basically it's hedging our bets a little bit, betting on two companies going into earnings instead of just loading up onto one. Okay, so I'm kind of managing the risk a little bit there. Best case scenario, Tesla gets on the S&P, they make a positive profit, and Amazon beats it and crushes it. That's best case scenario. So what is the dollar value? So I can pretty much predict that. So, I mean, if it goes up about 10%, I'm looking at about 15,000. If it goes down 10%, I'm losing about 15,000. Okay, so that's about what I'm willing to gamble in this scenario. Okay, and I think I have an edge here. I think we definitely have an edge here. Okay, meaning it's not like a 50-50 coin toss here. So we're basically, flipping a weighted coin on both stocks. Amazon might be a little weighted more than the other one. So that's basically how I break it down financially. And I pick like how much I'm willing to risk there, how much we're willing to lose or willing to gain. So it would be nice to clear 10 or 15,000. That's probably best case scenario. Worst case scenario, we lose 10 or 15. Either way, that's not the end of the world. Okay. So that's managing risk properly. I'm not throwing 100% in Tesla, So do me a favor and comment in the comment box and basically let me know if you think Tesla's going to beat, show a profit, if Amazon's going to beat their earnings, or if one's going to beat, one's going to miss, or if both are going to miss. Let me know what you guys think, and if you guys have any rationale as in why, that would be great too. I mean, it would be good to hear your thoughts on that. Like I said, because I can shave those percentages either way. If I get, 20 people that say, oh, well, Amazon's got problems with this, they're definitely going to miss. It may adjust. I may sell into earnings slightly. I may drop that percentage down to 15 or 10. So bottom line, you guys are definitely going to help me out, and I appreciate it for sure. And, be sure to, hit the like button for me and subscribe if you want more information like this on future stock scenarios and exactly what we're doing. So you guys have a little bit more, I don't know whether it be confidence or fear or whatever you want to call it, that you guys have a little bit more information going into these earnings on different situations. All right. Anyway, thanks a lot, guys, and have a great day.